All right, it's Friday and it's Financial Fun Friday. Move something. Thank you, everybody. You are welcome here to Financial Fun Friday. I am your co-host, Darlene Jenkins, and my other co-host,
Dr. Rita B. Rowland.
yes, Dr. Rita B. Rowland, and we are your Financial Fun Friday team, and we are being brought to you by ABS Retirement Solutions, where we're always bringing you what's new and what's next in the financial services industry. So, for those of you that are just joining us for the first time, this is a webinar and a live broadcast that we do simultaneously on YouTube. We broadcast at 10 a.m. Eastern Standard Time on the first and third Friday of each and every month. And what we do during the broadcast is that we just pull back the curtain so that you can get an in-depth understanding of not only your federal benefits if you work for the federal government, we also cover county and local, state benefits. And then we give you some of the best retirement options and provide you with different strategies and nuggets for your financial future. So if you would like to join us here live on the broadcast, you can register. You see the links there on the screen at our bit.ly link, Financial Fun Friday. You can, if you're on Facebook, please head over there right now. Don't keep your Financial Fun Friday team a secret. Head over to Facebook. We're at Your AB Solutions. And then, of course, on YouTube, you can always type in Financial Fun Friday, or you can just put in our tag at ABS Retirement Solutions. And if you're watching us on your computer, take a picture on your phone, take a picture and scan that QR code, and you will be right here with us, where when you talk, we talk right back to you. Also, during this time, Rita, we do our microphone checker, 1, 2, check in. We always ask you to let us know where are you watching us from, because we know our audience tunes in from all over the country and soon the world. So you can just type it in. If you're watching us later on Facebook, or if you're watching us later on YouTube, go ahead and drop it in the comments, where you tuned in from. We would love to hear from you. Rita, do we have any check-ins?
Yes, we have Delaware, Fort Washington, and DC. Of course, you got me, Upper Marlboro, got you, Largo. For those, that's all that was willing. I do know where some of them from, but they didn't tell me to broadcast it, so I won't.
Right. Well, I have to just shout it out because it's early over there on the West Coast. I want to give a shout out to our viewer tuning in from Washington State. Hello. Thank you
Hello,
so much for
soldier.
getting up. Yes, getting up and joining us today. So we're going to go ahead. Of course, this is a new year. We have new opportunities. We're in the first quarter. We're coming to the end of where we're starting the last month in the first quarter. And so we've jumped from 2023 into 2024, and we want to just keep this rolling. So on the last broadcast that we have, Rita went over, do you understand your taxes? Because guess what? This is tax season. And so we cover different things like the tax brackets for single, married, and all of the difference between a bracket and a tax rate. So if you didn't see that broadcast, go back to our YouTube channel and look at it there. And then more importantly, one of the things she covered was on the tax rates. I know it feels like for some people we may be paying a lot in taxes, but taxes are actually historically low right now, thanks to the Secure Act. So in 2026, so the end of 2025, these tax brackets go away that you see here on the, I guess this would be your right that says 2024, and we're going to go all the way back to 2017 tax brackets. Now, there can be some arguments made, right, Rita, that, hey, no, Congress is going to act, but act on what? We're broke. We're out of money because we haven't been getting enough taxes in. And so if you look over here, you can see right now in 2024, if you're making, 94,000, 100,000 or more, then when you look over to what they're going back to in 2017, right now you're in a 22% tax bracket. But in 2026, when the brackets roll back to 2017 rates, 100,000, you're in the 25% tax bracket. So why are we bringing this up? Because it is important to know that there are strategies that you can use to help combat this change that's going to be happen in some iteration. It's going to happen. So one of the things we want to do right now is go over a nugget, a financial strategy that can help with the upcoming higher tax rates that we are going to be experiencing. So let's just go over, Rita, can you break down what our three tax buckets are and how it works? Why is this important to understand?
Yes, I can. Thank you, Darlene. And hello, everyone, again, for those that just joined us. We're talking about taxes, and it's important to understand when you think about taxes, there are three different buckets in how taxes are taxed. So the first one is income tax. Those are your pension, those are your payroll, those are your stock dividends and mutual fund dividends and interest. That is where that is taxed. It's taxed at the ordinary tax rate in the moment. So it's taxed at the rates for 2023. What you earn this year would be taxed in 2024. So when you think about income taxable, that's the bucket where everything is taxed at this current rate today. Then the next bucket is tax deferred. Then that bucket says that we're going to delay your taxes today and we're going to make you pay taxes later, but it's still going to be based on what that tax rate is. So for 20 years, 30 years, you've been deferred money in what? Your 401ks, your TSPs, your IRAs, your 403bs, your 457s, all them three letter alphabets or numbers, they're tax deferred plans. And of course, also annuities allows you to defer if it's pre-tax or if it's pre-tax and tax deferred. It's saying that you give money today and you pay taxes later. And this is the one, Darlene, income taxable things are, it is what it is. But is this deferred one that we've come in, even as planners and as strategists, looking at people and looking at our own lives and say, wait a minute, I may not should have done that in the 80s and the 90s and in the 2000s, because what we all did not know, Darlene, was what is that tax going to be when it's time for us to collect our money. And we often talk about a story, Darlene, is like, would you join business with me if you had to put up all the money, you had to take all the risk, you had to manage the business day to day, you had to have the sleepless nights, deal with all the problems, come up with all the money. And then at the end of the 20 years, 30 years, I come tell you how much of business would I want? Would you join business with me? And no matter who I ask, Darlene, they all tell me no.
Nope.
But what we all did was join business with the internal revenue when we did this tax defer, not knowing what they was going to be asking us to pay in that tax year that we need to pay. So that's the second button. The third one is the income tax free. This one is the one that we all love. This is a bucket that the income is not taxed, but there's only three things that go in this bucket. One are Roth accounts, whether it's a Roth IRA, Roth 401, or Roth TSP is a Roth. Okay. The second one are municipal bonds. The problem with those is that the counties are broke, so it's not sure how those are going to look. And the third one is specially designed life insurance. So be clear, not all life insurance are created equal. So it has to be structured properly for it to fit what you're trying to accomplish. So once we understand those three buttons, it then makes us understand how do we prepare for retirement. So let's talk about what this income tax one can do. Now, here's the issue that many people have. They're like, well, Rita, I've been saving for 20, 30 years. How do I get this money from this tax deferred bucket into this tax free. And one of the ways you could do it is to convert. So the IRS has given us for the last, few years or more that you can convert this pre-tax tax deferred money to a Roth IRA. But let's look and compare to see what would it look like if you do it and if you don't do it. So here's an example. We're going to use these parameters that this person is 64 years old in a 25% tax bracket. Their IRA is worth $500,000 and it is growing at 5% annually. The money from the RMDs are not used for income. So they have enough income, whether it's pension, Social Security, their plan. They don't need this money. So they reinvest the money that they have to take out for their RMDs and they reallocate it back into some type of investment, and that investment is earning them 5%. And this person lives to age 90. So we're saying from 64 to 90, and they're starting this at RMDs. So at 72, everything that they need to take out from 72 to 90, the RMDs that they had to pay on those withdrawal was $204,000. Okay, that's the taxes. Then they took the money that they used, reinvested, and the invested assets created another $96,000 worth of taxes. At 90, when they passed away, that pool of money passed on to their heirs. The heirs had to pay $156,152 for a total tax of $456,868. Now, darling, remember, we started this when they were 64 with $500,000. By the time they died at 90, they almost paid the exact amount that they had over those 20-something years just in taxes. Next, let's look at what if you were to convert. Because many people, this is the part, darling, that messes people up. The same scenario, but what you decided to do at that age was to convert that $500,000 of traditional TSP, IRA, 401k, 403b, moved it into the Roth. And that conversion said, okay, at 25% tax bracket, Uncle Sam said you owe me $125,000. Your total tax paid is $125,000. Now here's the issue. This can't be done, Darlene, for everybody like is $500,000. We have some people that we may have to help you stretch it out over a few years. We need to look, depending on your age, this person is 64. So they had to also take into account Medicare costs. So there's other factors. But when you think about taxes, it's $125,000. So let's see how they stack up together. And so before we go there, let's look at this here. I want you to understand, I'm going to go through this very quick. I did this at the last Fed Friday, just comparing traditional 401k money to Roth and the difference in your taxes. So this person has $116,000 of income. 32 is pension, the 34 is Social Security, 50,000 is from their traditional 401k. Now, all of the 32 is taxable. Why? Because it's a pension. Social Security, based on that formula, and it's called the provisional income formula, 29.3 of that is taxable. So even though it's 34, they're being taxed at about 85%. Their 50,000 from their TSPs, 401ks is 100% taxable. Remember, it was tax deferred. Now you're putting it in your pocket. Uncle Sam wants you to pay taxes. So your gross income is 111. Your standard deduction is 29.2. Your taxable income is 82. At 12%, you're paying $9,388. Now let's look at that income with something different. Now let's assume in that same income, 116, but the 50,000 came from a Roth. This 50,000 is not taxable. Over here, your pension is taxable, but the Social Security is not taxable because the formula that they use take your pension money, it takes half of your Social Security, right? And it takes any other income. But because this 50 grand is not taxable, it left this married couple in a tax bracket that their Social Security wasn't taxed either. So instead of being taxed before on that 416, oh, it was like 113, you're only taxed on the 32. Take away your standard deduction, your taxable income is 2,800 and not 82,000, and your tax rate is 0. So the difference in the Roth, imagine, well, I had to pay 125, but you're 60, 72 to 90, a big portion of your income is not taxable, which means it doesn't just impact income taxes, Darlene, it impacts Social Security, it impacts Medicare. So the savings for you could be large over time for a lifetime, 20, 30 years, that could make a big difference in your retirement income. Because remember, what you pay is what you don't get to keep. It's what you can't
Exactly.
your lifestyle with. It's what you can't travel with. It's what you can't transfer to the next generation. So let's look at this last slide or two. We're going to be out of here. And so
Oh,
it's about planning, because when you think about it, these are the buckets you have. There's only three buckets. And so what we want you to do is look at your three buckets. Do you have three? Do you have two? And let us help you come up with a plan so we can look into your future to say, hey, you're going to pay $456,000. You're going to pay. I did an appointment yesterday with a couple. They have so much income. They would pay Dolly $1.4 million in taxes because they have large TSP accounts and they have enough monthly income. As that thing grow and what they pass to their heirs is tremendous. And so it's important for us to understand, what does that look like when you think about retirement. So as that slide said, we're looking into your future to plan so that we can help you make a good decision today. So hopefully you guys understood it, understand the difference between taxable money and tax-free money, and not just the difference in the where they fall in the bucket, but how do they impact your monthly living. Because at the end of the day, darling, that's what it's about. We want to make sure we have enough money to last as long as we do, and we want to be able to have our still lifestyle and afford the things we want, especially when we retire. You work 40 years, 35, you want to go travel, you want to do all these things, you want to make sure you have enough money to do it.
absolutely. And as Rita just said, planning is bringing the future into the present. Let's look at what's going to happen in the future so we can do something about it right now. As a whole, this strategy that we went over, and it's very important, reach out to us so that we can help you get a better grasp of this, see how it will fit your particular situation. Because Rita, overall, we at ABS Financial Solutions and your Financial Fun Friday team, we are weather forecasters. When we look at, traditional weather reporter or the weather forecaster, they look out. We have been programmed to look at things from a micro view. How much can I save this year? That's all I'm concerned about. Yes. What am I going to get back in a refund? How much can I save on my taxes this year? Well, here at ABS Retirement Solutions and your Financial Fun Friday team, we take a macro view of what you are going to pay over your lifetime. And see, because we're paying it incrementally, we don't look at the big picture, right, Rita? And right. See, oh my God, I've paid $500,000 in taxes, me and my heirs, versus 125,000 if you had, based on the scenario we went over. So it's very important. Allow us to, contact us so we can map out a strategy for you to look at what your buckets are. There's a QR code here on the screen. Go ahead and schedule a 15-minute strategy session so we can see how this strategy could work for you. Please, you want to sit down and talk to someone like Rita and myself to make sure you implement it correctly. Because as Rita said, this is intertwined with other areas of your life as you get older, like your Social Security. You don't want to get hit with the IRMA tax. If you don't know what IRMA is, call us. We'll tell you what that is all about. So your Medicare, all of that. So call us so we can help you map out a strategy and put all of those pieces together.
Yes.
So reach out to your Financial Fun Friday team. This has been another great episode. We hope you took some notes. If you don't have your Financial Fun Friday notebook, you want to contact us to get that so you can keep all of these good notes from the broadcast. We thank you for joining us today on March the 1st. We're almost at the end of the first quarter. Are you on track? We're going to be going over that on the next broadcast on March the 15th, the third Friday in the month. So when you come, bring one with you. No, Rita, don't bring one. Bring 3 with you, because what we put down, everybody needs to pick up. So it's been great. Thank you all for joining us. Yes. If you have any questions, you can email us at at yourabsolutionsinc.com, or just give us a call here in the office, 301-577-6340, and we would welcome the opportunity to help you and your family. All right, that's it for your Financial Fun Friday broadcast for today. Have a great weekend, everybody. Rita, you want to give us some parting words?
Yes, no, just take heed to it. Take a look at your own situation and come up with the right strategy, darling. We're just here. And one of the biggest things that I just harp on all the time, planning is everything, because once you know a thing, you can then make the wise decisions to do something different and not be at the end like, I wish I would have known. Most people have known, but most people have not made a decision to do something about it. So we're giving you this opportunity to sit down with us, take advantage of that 15 minutes. Maybe you just have a question, you just don't know. Take the time. It's a complimentary 15 minutes. We don't need nothing from you. It's just a conversation to see if we are able to help you. That's it.
Exactly. So give us a call, 301-577-6340, or use your keyboard and email us at FFF for Financial Fun Friday, but it's FFF at yourabsolutionsinc.com. Have a great, safe, and wonderful weekend, everyone. We'll see you on the 15th for the next broadcast. Bye-bye.
Bye.